Good morning, traders. Welcome to the Wednesday live stream. It's June 19th, 2019. I'm Todd Gordon of tradinganalysis.com. I'll be bringing my team on here shortly, but happy day after 618 day. Happy Fibonacci day. Happy Fed day. Happy post-President Xi agreeing to meet with Trump and Japan at the G20. Lots going on this morning. So, listen, if you are watching here on YouTube, which you probably are, and you appreciate our weekly ramblings, go ahead and click that thumbs up if you guys don't mind. Let YouTube know you're watching. Throw your comments, questions, insults in here. Let me pull those babies up. And how's everyone doing this morning? Aces says, on vacation but tuning in. Well done, man. Where are you vacationing? Andrew, Jack, John, Ezekiel, Donnie, Fred, what's up? What's up? Fed day, huh? What do you guys think? Are they going to cut or are they going to do nothing? What do you guys think? What do you guys think? And to help answer that question, let's bring in my fearless team, Alex and Terry. Hi, boys. Happy Fed day.
Good morning, Todd. How you doing?
I'm good. And Terry just came back from vacation. Speaking of vacation, in Hawaii,
Yeah.
How was it?
I'm all cleaned up.
Yeah, you're all shorn.
I wanted a
tan
uniform tan.
Yeah, I know.
Even up here, you know.
I made that mistake once when I was trading for a living in San Diego. We would surf right after market closes at 1. I just shaved the goatee for some reason in the middle of summer. That was not a good idea.
No.
So
You're a professional skier too, so in the wintertime, I'm sure you're wearing those goggles.
Yeah.
And then you get the raccoon tan.
You're right. You're right. Yeah, Alex, you ever shave that beast off your face? Or you always leave it on?
No, I'm not shaving.
Guys, do I have any echo? Alex and Terry or viewers, do I have any echo? Should I put the headphones on or are we okay?
Sounds okay to me.
Okay.
I have a little bit of echo.
All right, I'll throw my
No,
headphones
but that's fine. That's fine, Todd.
Okay. Okay. Ace is in Greece. That's awesome. I love Greece. I love Greece. We were there last year. So everyone says nothing unchanged. July cut, nothing. You know, let's kind of set the tone there, if that's okay. Alex, this is going to take me a second. Alex, I'm going to lose you for once. Actually, you know what? No, I'm not. I can do this. Hold on. Alex was a last-minute addition. Did you bring a note while you're late for this? I'm just joking. Call Alex. Hold on. Position. I'm going to bring you into
tardy. Yes.
Yes. Hold on. I'm going to bring Alex in here. We're going to do the three-way at the bottom. Here we go. Okay. So let's just kind of set the tone here, guys, as to where we are in terms of Fed fund futures. I believe there is a 90+% that they're going to cut at least twice through September. So as we bring up this kind of handy CME Fed Watch tool, for today, CME markets, futures markets are pricing only a 24% chance that they drop from the target 2.25, 2.5 to 2 to 2.25. So only 24% chance of today. But here's where it gets interesting. As you go out to July, there's a 63% chance they drop by a quarter and only 17% that they stay unched. So 17 subtracted from 100 would be that total right there, 63, 73, 81, or whatever it is. So 81% chance that they cut by at least 25 basis points in July. And then September, I think it's 95%, 94.5% chance that they're going to cut by at least a quarter, and 63% chance that they go by 50 basis points. That's unbelievable. You know, the markets are facing, the U.S. is slowly realizing that our yields can't continue to have such a divergence for the rest of the world. There's so many markets around the world that are experiencing negative real rates, and this is kind of a catch-up here. So volatility should definitely be here with us after the meeting and through the summer. So it's going to be interesting. Alex or Terry, what do you guys think? Any input on Fed policy, interest rate decisions here going forward?
Would you be first,
they know
Terry?
more than we do.
Well, I wouldn't assume that, Alex. Or Terry, would you say, Alex?
Well, they're supposed to know more than we do, but my kind of the thing is, the Fed only has this one handle to manipulate the economy, and they were fighting for so long to try to claw back and get that handled. That ammunition in their pocket, so when they needed it, so when the economy started to falter based on seeing rising inflation or fading employment, they would use it. We don't have either one of those situations right now. We don't have runaway inflation, and
we've got slowing
we're
global
at
growth.
great unemployment. So why would they pull the trigger today? I don't think they'll pull it today.
No.
Personally, I think they'll give it another month, and maybe things will change in the market, and I think they might pull it in July.
Yep, that's what markets are pricing. So yeah, the U.S., the emerging markets, the Eastern markets versus Western markets, kind of divergence has been massive, and that's kind of the theme that I'm gonna show you today to start off. Is just starting to see some signs that emerging markets are coming back. The U.S. dollar is getting weak as that rate differential, 10-year spreads around the world is starting to compress. So we'll jump into that a little bit. Obviously, show you the positions that we have. A couple announcements. Tomorrow's a busy day. I'm going to be at the Benzinga Summit in New York City. I'm going to be on the live trading panel, so I'm going to be doing some live trading with those guys, a good group. If anybody's going to be there, let me know. And then after that, I'm going over to CNBC to do power lunch, go back to Benzinga to trade the close for 4, and then go back to CNBC for fast money at 5:15. So if anybody's in the city, let us know. Busy day tomorrow. Everything else is good here at Trading Analysis. We're mostly long on the portfolio side. This is actually the least amount of cash I've had on hand in the portfolio ever, and since inception in this portfolio. We have only about 17% cash in the portfolio. Option trades, we have some various options trades scattered around to kind of take advantage of some short-term moves. So that's where we're at. Let me get those comments and questions back up. As I'm doing that, Alex, anything to jump in with?
Yeah, I mean, I will keep it very simple, because I think Fed wants to keep its mandate, high employment and inflation close to 2%, and now you have 4 major things which are going against that. Basically, you have a basic price in oil coming down.
Yep.
You have also yields lower than the Fed fund rates, about the 50 basis points. You have also a negative change in payrolls. So I think actually the environment is there. The question is, for me, is just is it going to pull the trigger, like test the market for 25 basis points today, or he's going to announce it for July. So I'm kind of leaning that knowing Jerome Powell, and that he was kindly admitting that he was maybe a fast in rate rise, that he will possibly.
You think?
Yeah, yeah. I think he.
No,
he
I'm agreeing with you. I'm agreeing with you.
So he might pull a trigger for 25 basis points just as a test. So we will see. But definitely, if he doesn't pull a trigger, he will announce.
Oops, did we lose Alex? Terry, you still with me?
Yeah, I'm still here.
Okay, looks like we lost Alex.
Nope, Alex's feed froze, I see.
Okay, no problem. No problem. So I'll tell you what we'll do.
We're getting back here.
Yep. Let me just do this quick on the fly.
Yeah, I don't know whether Jerome Powell is going to act preemptively or just give us the indication. Usually the Fed gives us the indication before they make the move, and we didn't get that indication last month.
I don't think they're going to. And there's a couple signs that I think things are starting to stabilize here a little bit. I don't think. So let's go into the indexes here to start. And we are still working several interpretations. I mean, that's what we do at Trading Analysis, guys. We always have. I never sit here and tell you, I know where the market's going to go, and here's your one wave count. We're traders. We have multiple. We have 30 positions we're managing at one time now here for our members around the world. I'm always checking my backside and always second guessing myself. I think for any money manager, that's what you should be doing. So, the current interpretation of the S&P that we're looking at here from the wave count, I've adjusted a little bit. I've become a little bit more bullish. I was considering this to be the entire ABC of a proposed B of a contracting triangle. This is one interpretation. I've made way, Terry, since you've been gone. Terry just got back from Hawaii, as I mentioned, and looking for a C wave move up. And I'll tell you, this is not that obnoxious. A typical extension, if you take the 2018 drop, multiply it by 1.27, which gets a little esoteric out there. That's the square root of the golden ratio, which is 1.618. If you take the square root of that, it comes into play all the time. That's at 31.28. The relationship that we're looking at there is if the 786, which coincidentally is the square root of the inverse of the golden ratio, if you take 0.618, your Fibonacci retracement, square root out in your calculator, you get 786. I find that these two work very well together. So if you don't stop at the 786, you have a decent shot going to the 1272. So that's kind of what we're playing there. That's one interpretation. Okay, this one says 2800 to 3128, and we're positioning in all of our trade alerts on our portfolios for that. Another possibility would be a significantly more bullish wave count, which is this wave 4 that we're discussing already finished, and we're in fact in a new bull trend. Okay, now if that's the case, here's something that's a little unnerving. You could almost trace an inverse head and shoulders here, a very shallow wave 2. If that's the case, holy cow, we could be ripping. I don't think this is going to happen, but I will not be surprised if it does. Again, just take the Elliott wave aside. We've just basically been sideways since January of 2018. Here we are, June of 19, a year and a half of unch price action. If you get the push, either wave count that I'm looking at says we get this, but this one says we could go significantly higher. I don't know. I'm keeping it completely wide open here. And of course, there's a third interpretation of an expanding diagonal or expanding triangle set by a significant fall. All of them for now, guys, says higher in the near term, and that's what we're expecting. Terry, if there's anything you want, definitely jump in and interrupt me, okay? NASDAQ, same look here. If this is A of B, this is B of B, and we would get C of B up into the 1272 at 8285. There's your diagonal, and I don't think I'm not even tracking the wave 4 completed here count that says we explode higher. But either interpretation says we have room to go higher. Even the rut, guys, even the small cap rut is picking up based on this interpretation right here, which, let me clean that up for a second.
I mean, the Russell's been the one that's just been lagging forever.
Yep.
And following the trend of the overall market. I mean, if in the absence of the S&P and the NASDAQ, had you not even seen what was happening with those wave counts, and you were looking at this would just be like a normal expected corrective move, right?
Right.
So, now we've got this opportunity where we've got this expanding triangle going on in the S&P. And Vector has showed back in history 2 or 3 times, I think back in the early 70s.
Correct.
And maybe once in the 60s where this expanding triangle had happened. But to me, it's kind of curious that all 3 of these markets aren't actually doing the same exact thing.
That's not all that surprising. We have Small caps. Well, there's a couple different reasons why small caps are underperforming here. I actually find that it is a bit interesting. But regardless, let's stay on the technical picture for now. I want to keep our schedule. I could almost see the small cap Russell still making a new high here, making a high above the last couple months, but also staying below that 2018 high. It's possible that if we're doing some kind of expanding triangle count, that the rut actually falls short and fails below 1700. But I think for now, guys, I think it's safe to assume we get at least that leg. And if you look at the scale, that's a summer rally heading into the September cut. Alex, are you back?
Yeah, I'm back. I don't know why I was disconnected, but all fine now.
Okay, good. So we just went through the indexes, guys, and one thing I wanted to show you here is we're actually seeing some. Actually, before we get too far on, I hate to ignore all these great comments from everyone, and I apologize. This is only 30 minutes. We've got 3 guys on it. We have so much to say, but I hate to ignore. Luis says, Todd, does the VIX show low concern to you? Trump threatened to demote Powell. He's been doing that forever. Might get volatile as the S&P hits resistance. Sure. Let's take a look at the VIX here quickly. Where's my VIX? 16.5 VIX. A little bit of a pump up this morning. Pretty mid-range. There's not much that I'm seeing there. I'm actually a little bit more focused on some of the internals, like put to call ratio, vol skew. There's a couple other things that I think are a little bit more insightful than the VIX, which, it's kind of just mid-range right now. It's not doing much. We're not certainly down at a 12 or 13 VIX. I think that kind of low VIX, low volatility regime is over, and we're settling into that upper range. But no, there's not that much that concerns me about the VIX. Guys, if you want to share charts, post them like on Twitter or post them. I don't mind popping them up here, but Pepe says we're in minor 3 of intermediate 1 of major 3 in my opinion. Like, I've been studying Elliott my whole life. I can't even follow what that means. You know what I mean? I'm a picture guy. I'm a simple kind of guy. Send me, post something on Twitter and then drop the link in here. I'll pop it up. I don't care. You know what I mean? Just give me a picture. I was a kid who liked picture books. And I mean that with love, Pepe, trust me. Good morning, Michael. Charlie says with the interbank rate already lower, 2 points, the market may have already voted and the FOMC follows. And that's kind of the point, Charlie, right? That the Fed kind of follows the market. It's not like they need to act preemptively. I think they're kind of designed, their mandate, their dual mandate of price stability, maximum employment is kind of inevitably puts them behind the curve. And I think they take a lot of flack. I think they don't do a lot of good things, smart decisions all the time, but they're inevitably behind the curve. If that's what you're saying, I agree with you. Luis, no problem. All right, so from a sector point of view here, here's what's kind of interesting. I don't think a lot of people are talking about this. So everyone's been talking about the leadership of like staples and utilities. Utes. What's a ute? Remember that? Name that movie. Utilities, staples, real estate. I'm actually seeing a little bit of a shift here. So if we go over to this screen, which again is normally located across about 7 feet of monitors, it looks a little neater than this normally. My notes, staples. Let me find XLP. Pop him out. You're starting to see XLP relative to the S&P drop. This is a daily chart. So this is only a couple weeks worth, but those staples are at a high. They've been outperforming on a relative basis. You're starting to see staples drop. Staples underperforming. Financials. No surprise here with this big drop in rates. Financials relative to the S&P, double top, dropping away, not breaking these highs. As much as we'd like to see financials go, from a sector point of view, not seeing it. Utes. I gotta find it. They're all scrunched up on this little monitor here. Utes, even worse. Utilities just made a lower high in the relative strength, even though utilities are at a new high. Even with rates dropping as quickly as they are, we just kind of did a little head and shoulders pattern there on the relative performance to the S&P, not seeing our performance there. So staples, financials, utilities, just reading my notes here, losing strength relative to these two guys, which, check this out. Consumer discretionary, that relative strength is on a tear. Even though we've not made new highs here in the XLY, we're close, and this guy is outperforming. XLY, who's some of your biggest holdings there in the XLY? XLY.
There's Amazon in there, right?
Home Depot. Home Depot. And we just picked
Home Depot.
Yeah, yeah. And here's a think or swim tip. I'm kind of going all over the place. Again, I'm a little cuckoo.
Yeah, McDonald's has been on a big tear too, Todd.
Oh, absolutely.
Alex and I were checking that graph out the other day.
Absolutely. We have that in our portfolio, right? XLY holdings. Here's a little think or swim tip that I do here, guys. How many of you guys are on think or swim? Just go to this site right here. This is how I update my sector holdings. You go holdings, download the holdings. It goes into a spreadsheet. This is not as bad as it looks. Excel pops up. Okay, and all I do is just to make sure the rankings are correct, I go down and grab like the tops, whatever, 60, copy them. I go to my XLY in Thinkorswim, import, paste symbols from clipboard, and boom, now my holdings are updated. So the biggest holding right now is Home Depot, which I just did a CNBC piece 2 days ago. We just added Home Depot to our portfolio. It's trying to break like a triple, quadruple top of 210. It's getting a boost from lower rates. Housing's starting to move up there a little bit. Home Depot, McDonald's, Nike, Starbucks, bookings, Lowe's, TJ, General Motors, Target. So those are your XLY, and of course Amazon's at the top. Amazon's starting to come back. So we're seeing a pretty good move up there, and with XLY being led by Amazon, XLK is coming on. So technology's starting to rip again. If you look at that right there, you know, that's a pretty strong XLK daily chart coming back to the 50 and the, I forgot what this is. This is the 20 or this is the 9-period moving average, and the 50 right there, with the XLK relative to the SPX still holding bid. So you're starting to see technology and consumer discretionary come back. Low rates starting to give bids into like Home Depot. If you look at that chart, we'll pull that up in a second. I kind of start to think it's risk on. So that's kind of the way we're playing this. We will see some volatility after the Fed here today. And if we go over to that Home Depot, should be right there. Home Depot, potentially a wave 4, trying to break this top that's been in place since Jan of 2018. I mean, anytime a market tries a level 4 times, she's probably going to get it. She's probably going to get it.
That's a market that looks like it's ready to punch through.
Yeah.
And, you know, interest rates coming down, I think the home builders are also going to be potentially at play. So that's in the XLB.
Yep. That's in the materials and...
like Pulte.
Why am I drawing a blank on the home builder ETF? IT, somebody help me out. Home builder ETF. I'm totally forgetting it. ITB. That's it. ITB is a home building ETF. Not quite as strong, but it's okay. That's okay. It has the ability to move up there, but nothing really jumping at me there. So how are we doing? 9:13. Okay. All right, let me get back on track. So, notes. Here's another thing that I find that's interesting here. I'm going to start to shift more into the macro stuff, bring Alex in here on the Forex side, and maybe if we have enough time on the cryptos. High yields. High yields were signaling for a long time that the market might be in trouble in terms of corporate defaults. But if you look at HYG, to me, That's not a bearish chart. And if HYG is starting to come in, I mean, put your basic technical analysis hat on. You got a little bit of a left shoulder ahead or right shoulder, kind of a launch pad through 87. No reason we couldn't get back up to these old highs at 88. That should be a pretty quick move there. And if you look at even high yield relative, let's say, to the NASDAQ, okay, we're doing, and this is the same thing with the S&P, we're doing a little bit of a double bottom here in terms of the relative strength. Okay, it's been weak, but we came off the lows, we're starting to move up. Same thing could be said with emerging markets, EEM. Okay, we're starting to kind of find some support here. We just made a lower high, starting to move up, and if we do EEM into the NASDAQ, same thing, sort of a double bottom into the relative strength. We're testing it again. If we start to move up, which of course would be aided by a weak dollar, a lot of emerging markets debt outstanding is denominated in US dollars. A weaker dollar would certainly help them, help the commodity and the export currencies, which generally correlate to strong strong emerging market equities. A lot of good things would happen if the dollar weakens up, and that's why if the Fed wants to cut rates, I think they're crazy for doing it if the market's just off all-time highs, but it should aid international markets. So, and then the last thing before I turn it over to Alex, and he'll take you through Alex and Terry will take you through the Forex side, is China isn't even looking that bad anymore. You look at Hong Kong, this is the Hang Seng, just sort of a triangle consolidation here, sort of an ascending wedge. You know, we've got a little minor uptrend support here. You know, if Hong Kong can get on its horse and threaten the upper channel again, looks pretty good in China, and also Shanghai. Okay, I have sort of a consolidation. You could draw an Elliott triangle in here. I have it in a different analysis file, but sort of kind of holding support here in these Asian markets, right? So things don't look all that bad. As I mentioned in the free video, we have the gold trade on. I'm about to invalidate that bearish wave count and embrace this bullish wave count that Alex gave us here a while ago. We are still looking for higher prices up to 1,500, and of course the dovish Fed would certainly do that. We have this trade on. We have the GLD on right now. Right there, we've got the 25-28 call spread and the 19 Julys. Looking to move up there. I am long euro. Not doing well right now. Hopefully the Fed will reverse that one. And there's a majority of our holdings in our model portfolio, which is real money for our members. Okay. So with that being said, let me turn it over to Alex and show us, Alex, what's happening from your side in the FX market. Can you hear me?
Alex, I think you're muted. Yeah.
Wrong microphone. But can you switch over to your main microphone?
Yeah, that's not your headset microphone. That sounds like your camera microphone.
Your camera microphone, yep. Okay, let's leave it.
We can hear you. Just talk a little louder.
Yeah, just do it quick. There's a lot of echo. Alex, drop it down into the short term, actionable for the Fed. You know, what's going to happen over the next couple of days with that green 2? Give us some color there. Okay, nice flat. So what's the must-hold level there? Okay, we lost you again.
You got a 786 on that wave, on that 2V1, Alex? Yeah, we're looking for one more little push down in the euro before we go higher.
Yep.
Alex, we lost your.
Yeah, Alex is. That's okay. We got to work with Alex. All right, Alex. So it looks like go, Alex. I know you can hear me. You were talking into GoToWebinar. So, guys, sorry, technical difficulties. We'll get it straight. Go down, Alex, to the 60-minute chart if you can. I want to see green too. Okay, he's not listening. That's okay. No worries. So, guys, so that's going to be it for the Fed. Obviously, I think what Alex was trying to show us is we're looking at a green 2 pullback there in the euro. So we're looking for a little bit of support there and hopefully a move down in the dollar. The gold market is going in pretty bullish. I'd like to see a push up to about 1,400. And the bond market as well. I showed this in the free video last night. Pretty bullish count out there. So for 30-year bonds, I'm even potentially tracking a bullish wave count here in bonds. The way you project an upside wave 3 is you take the distance traveled in 1, project up from 3, and using motive wave, we just go like this, ratio analysis 3v1. Equality would be 156, and that was the top. Alex, mute your GoToWebinar if you can hear that. Okay, so that's going to be okay. So the 156 is going to be the minimum for the 30-year bond at 156 and 15 30 seconds. So if this is a good wave 3, we should be able to get up to that 1.618 ultimately into the end of summer, which is 165. So that's going to be lower yields. That's going to be lower yields. Within wave 3, we'd expect to see 5 smaller waves. So we'll do green 1, green 2, and I think near term, this is what we're looking at in the third of a third. And this price action seems like in bonds that this is a third of a third. That's been a really strong move up, almost a historic drop in rates coming from a Fed that switched so quickly. So I think for now we're okay in the lower yields. Home building stocks should do well. Financials should continue to underperform. I think internationals will do well if the dollar continues to weaken. Our big tech that does a lot of business overseas should continue to do well. And something we didn't talk about yet in the webinar, but we will be focusing on with the members are those semis. Semis had a big move up on the back of President Xi meeting with President Trump. All the semis were leading technology yesterday. So the semis are in a position to bounce from this support level extremely well and push higher. So that's what we're looking at there. AMD continues to be one of the biggest holdings in the RIA portfolio here. Actually not that big. Lulu's the biggest, Starbucks, Disney, and then AMD is the 4th largest. AMD I'm super bullish on, and I would like to bring it to a top 2 or 3 holding on confirmation that this downtrend is going to break. This is a 20-year downtrend, and AMD sourced from the 2000 top, 2006 top, tried again in 18, here we go again in 19. If this thing goes, that same wave 3 minimum projection, 100% would be at $87 in AMD. I'm not saying that happens next week or next month, but at the current rate, you probably could get there reasonably within the next, if you just use the appropriate Elliott model, you probably could get there by the end of the year. That'd be a huge call. Excuse me, no, I'm looking at my time. That's the end of next year, 2020. September, August of next year. So you're talking 15 months out, 18 months out in AMD. So watch out for that one. All right. So, Terry, what did we forget?
Only other thing is crypto markets, but since we're having technical issues with Alex there, I guess we can bypass that just a minute. But we can say that we've been tracking a pretty aggressive run-up in the cryptos since the December lows. Bitcoin's seen up over 9,000. Now it's basically in a sideways consolidation. Many of the altcoins are following suit with Bitcoin. There are a few that have characters of their own, and we've got an eye on those. So if you guys are interested in following the cryptos, we've got a subscription service for that too.
Yep, let me pop that up there for you. So I believe you guys are tracking. So don't buy this breakout in Bitcoin, right? We're looking for C, D, and E before we get the final wave 5 move up, correct?
Right.
Okay.
Yeah, we've got two or three different counts there that have got cryptos in some sort of a triangle or flat pattern. In the longer run, once this consolidation is complete, we're targeting much higher levels in the cryptos.
Beautiful, beautiful. Sounds good. Yep, we do offer full service Forex, crypto, stock option. We'll even mow your lawn for you. Tradinganalysis.com, guys. If you liked the video, hit that thumbs up button on YouTube. Drop a question, comment if you're watching the recording. Try to get back to almost everyone. And again, don't be afraid, guys, to draw up some charts. If you want us to look at your wave count, I'm much more of a visual guy, so throw it in there and we can go back and forth, okay? Ideas for guests. We're going to start building out the guest channel here. We have a lot of work being done in the office. We're building a nice, cool little set. So we're going to have my own Mad Money Jim Cramer set up here. Joe, the intern, who just...
You're going to get Cramer on?
Yeah, right. You know, he's come pretty far in technicals, though. Gotta tell you, I'm impressed.
Yeah, I know.
Maybe I could get
I like
on.
Cramer. He's cool. But he's so hard to follow. You know, Todd, when does this guy have time to actually learn all this information that he gives us? I don't know.
Not to
He's either asleep or what?
Not to take anything away from him. I mean, he gets up super early, but he's also got a good team. And he's got a great research team, and he studies like mad, but he's got some really smart guys behind him, helping him
I know.
interpret his, you know.
But you still got it, even though somebody's feeding you the data, you still got to suck that in.
Yeah.
I mean, because he regurgitates it like this.
Do. But also there's teleprompters there. You know, and just, you know, there's a lot of information that's being fed on CNBC, but I'm happy to say every time I get in front of the fast money technical charts, there ain't no teleprompter. It's just me fumbling my way through. So with the producer yelling at me in my ear, "Hurry up, Todd! That was a dumb point. Get to the point. Shut it down." And I'm kidding. I love those guys. So we'll be in the city tomorrow for Benzinga. Anybody going to be there, guys? Anybody going to Benzinga?
Yeah, you're gonna have a busy day tomorrow, Todd, running back and forth.
Tomorrow's going to be soul crushing. I don't know what the questions are. So yeah, tomorrow's going to be busy. It'll be fun though. And then I'm doing power lunch and then fast money in the afternoon, 5 p.m. And then we'll be back here for Friday. All right, guys, we're going to wrap that up. I've lost the questions. As I said, we are building a cool studio / setup, so we'll have a lot more content to come for you and fun stuff. Guy, Ziad. Guy, he's the one who originally gave me the name Flash Gordon about 8 years ago on Fast Money. He's been good. Yeah, Zed, I still do like Disney. It's a good size holding in the portfolio. Let me see where it's ranked. DIS is number 3. Number 3 at a 4.8% holding in DIS. So yep, Pepe in an AMD. Yeah, and the short interest in AMD Pepe was crazy. It was like 25% short. As we pushed up to the highs, it dropped. Last I checked, it was like 12 or 15%, but still, can you imagine whatever it is, 10, 15% of the float in AMD short? Whoa, that's crazy. So anyways, We talked a lot about bonds, say hey, so we'll just leave that one for now. We did talk about gold and crypto. We had a little tech issues. Oleg, what's up, what's up? All right, guys, we're going to leave it there. We're going to get to business. Members, we will see you at the 10 o'clock member webinar. Today is webinar day. So check us out at tradinganalysis.com. You can check us out at Services Marketplace. And guys, thanks for watching. Appreciate you spending a little bit of time with us. And hopefully we got to questions. We'll be interacting a lot more. As our technology gets better with this show, we'll be interacting with you guys a lot more efficiently and stuff like that. So appreciate the patience and the early goings of the show. Terry and Alex, thanks. And I'll see you guys in about 20 minutes. The rest of you guys either see a trading analysis or you have to wait till next week. Oh, that's rough.
All right. See you guys later. Thanks.
See you, Terry.